Thank you. Because I think, again, in the spirit of this conference, we've always tried to do a little bit of mix of like, what do we know from research? How do we put this in context? But also stories from the field. And Agustín is a founder and co-CEO of GAWA Capital, an impact fund, and he will tell us more about this. But before that, he spent probably more than 10 years in one of the largest family offices in Spain, focused on private equity and venture capital. So he did come from the traditional world of investing, and he discovered this new form of investing, and he has been very successful at it, and he will tell us more about this. And then we'll put together the panel with the other speakers. Thank you so much.
Fabrizio. Thanks very much to you for attending the conference. And I think I'm learning so much from all of you, looking at your solutions and your interest in inequality. That is even great 2 days experience for me. I will start just giving my 2 cents on 2 topics that have come recurrently in the conference. And one of them is the failure of capitalism, which I don't agree. I mean, capitalism, as has been said by some of the panelists, is by far the greatest system. But it's true that it has to be readjusted in one way. And this comes back to my undergraduate studies, about economic theory. And capitalism is about competition and trying to get as much to perfect competition, avoiding monopoly, avoiding oligopolies, economies which are usually bad for the consumer, which is all of us. How can we compete when we're living 2 billion people that lack access to competition? How much talent and innovative solutions are we losing from these people that are unable to compete? So if we really want to defend capitalism, we need to bring these 2 billion people to the market economy. That's number one. So it's not about helping them with donations, it's about working with them and bring them into the market economy. That's my first thing about capitalism. And then another thing that hasn't been mentioned, but I think is important, is that climate change and inequality are what is called existential risks. In climate change, it's very clear. There will be no companies, no investors, because we don't have a planet B. But inequality, and it was mentioned yesterday, also is producing populist governments that intervene into the economy. So it's very much correlated to lower economic growth. But it's also very much correlated to the increase in violence. So increasing violence and fragile societies are derived from inequality. So we need, it's very hard to mitigate existential risks, but one of the ways of mitigating existential risks is impact investing. That's one of the ways. It's not a silver bullet, as Fabrizio said, but that's one of the ways of doing it. I will start and we'll go very quickly through what is impact investing, because already Fabrizio mentioned it very clearly. Traditional investing, that's what we all know. It doesn't take into account impact at all. And then we have the world of sustainable investments, where we have, it's the Impact Management Project, which is an organization that brought the UNPRI, the OECD, SASB, GRI, anyone that has something to say about what is impact and what is impact investing, classify sustainable investments in the ABC type. The A responds to avoid harm. So in this case, the investor doesn't want to invest in certain sectors that the investor is considering that are harmful for the planet or are harmful for the society. So it's an exclusion list. The second is benefit stakeholders, where the investor is already incorporating ESG factors in the investment decisions, environmental, social, or governance factors, which is good, But impact investor is something that responds to contribute to solutions, C of contributing to solutions, in which case you want to contribute to a solution to a specific social or environmental challenge. So in our case, we want to improve the livelihoods of vulnerable communities in rural areas in emerging markets. But that's just one of the potential solutions. We can, as Fabrizio was mentioning, we want to improve the livelihoods of elderly people in Spain, for instance. All those are good examples. I'm not going to go in detail of, there are 5 dimensions of impact, which are described over here. But I'm not going to go in detail into those. The 5th that is missing there is risk, because risk is related to any kind of investment. But what we will say, and I will focus on impact investing has to provide a positive impact into a specific challenge. That's number 1. So you have to identify a challenge and you want to generate a solution that provides positive impact. Then, second and most importantly, the challenge has to be underserved. So there might be not enough money flowing already to solve that challenge, or maybe there are not enough solutions in the market to solve the challenge. So that's very important. And this is about additionality. So you're bringing in either financial additionality, because money is flowing to situations where it's not usually flowing, or you're bringing non-financial additionality where solutions are coming to solve a problem that didn't have enough solutions to be solved. And then, this is so, additionality is one of the things that really differentiates impact investing from other types of sustainable investments. And the other thing is transformation. Because what the impact management says is that impact investing, the impact should remain in the long run. So the impact cannot fall when you leave the investment. The impact has to stay there for long. So if you want the impact to stay there for long, you need to change, you need to transform the companies where you are investing, and maybe not only the companies, other parts of the value chain, so that the impact continues because the local ecosystem has been transformed and you left it transformed. So additionality and transformation are 2 things that are very much related to impact investing and will help you to differentiate between impact investing and other sustainable type of investment. And one very important thing, we're not against sustainable investing. All impact investors, we have exclusion lists. We are responsible investors and we have ESG criteria as well, But what I want to leave you is that impact investing takes several steps further. And then I come with this picture that I very much like to look at, because I still had some hair, so I look very much better. When we started, my partner Luca and myself, this was one of our first trips to emerging markets with some beneficiaries, of which we always learn a lot when we go over there. It's not us financial people that go there to solve the lives of vulnerable communities. So we launched GAWA with the objective of improving the lives of vulnerable communities. So at that time we said, well, it's not Luca and Agustín that are going to emerging markets to look for vulnerable communities, and we put our solution into their hands. So we realized that at that time that there were like 10,000 microfinance or similar institutions operating all around emerging markets that did have the capillarity enough to reach these people. So we said, look, we don't want to be a just plain microfinance investor. We want to use this microfinance institution to do something that is meaningful for us, to maybe go to the most vulnerable communities, especially in rural areas. So we said, how are we going to invest in these institutions? We are going to provide private debt. So most of the investments in our first funds were private debt. And private debt lowers the risk perception of the investors too, which is positive in this case. And we said we can also do some private equity investments that will complement the return and maybe provide a return that makes commercial sense for investors. So we've been 14 years in operation. We now manage 220 million euros. We launched 3 funds, now in the process of launching a 4th fund, and we have 2 managed accounts. And there you have the financial metrics, which I'm not going to go very deep into those, but I will say that we are getting almost an 18% IRR, gross IRR, in the private equity investments, which is around what we wanted to do. And we're getting around a 6% euro terms in the private debt investments. So the mix in the first fund, which was mostly private debt, we provided a 6.3 net IRR. We wanted to exceed 6%, and we provided 6.3, so all the investors were very happy. The second fund is already providing a net IRR of 4%. And the third fund is still in investment period, but because it has a blended finance structure, and we'll go now in blended finance, is providing also a 4%. So impact investing, we have made a profit in almost every single investment we've done. So it's possible to make money in this sector. And then we reach over 500,000 people. Most of them are women. Most of them live in rural areas, so that resonates very much with the original mission. I'm not going to go through this, but what I will say is this is a journey, where we learned, in each fund we launch, we learn something new. Initially, it was rural communities, we want to give you money. So we invest in institutions that provide money to these vulnerable communities in rural areas. We realized that they were not serving smallholder farmers because they consider them too risky, and they are the ones that concentrate most of the poverty in SDG number 1. So we launched Uruma, which was our first blended finance fund, for this institution to start lending to smallholder farmers with products that make sense. And then when these institutions were already building a portfolio of smallholder farmers, we realized that adaptation and resilience to climate change is the biggest challenge today for them. So this is the track record. I'm just going to focus on the map. We invest heavily in Latin America. As a region is the most important one. But as a single country, the most important one is India. And we have also made some investments in Africa, where we try to do more, but it's very challenging to find investments that return the capital in Africa. And this is the people that are behind the investment committee. So we have diversity in the way that we bring Prasida, who is Indian, who knows a lot about microfinance in the field in India. Marcela, who is Colombian, who now is very important for this fund because she's heading the climate finance division in the financial services group of IFC. And then we have David and Eduardo that have helped us since the beginning. So Uruma, we have invested 18 investments. The net IRR is 4%, TBPI is 1.1, and we have supported 300,000 smallholder farmers. But something about Uruma is that it was the first blended finance fund that was launched in Spain. And what is blended finance? Blended finance is a combination of different risk-return profiles of capital with one objective, which is catalyzing private investments. Because as you know, the just transition, the SDGs, they require trillions of investments to be achieved. So public institutions, what they want to do is not donate, they want to invest and get money back, but they want to put the money in a way that really incentivizes private investors to come in. So Uruma, we had a contribution from the European Commission of 10 million of first loss. The Spanish Development Agency gave us 20 million of concessional debt, subsidized debt, pari passu, not senior to the private investors, pari passu, and when they got a 2%, they will give any excess return to the private investor. So the private investor sits on a cushion and then gets a return that makes sense from a commercial point of view. With this, in the middle of the pandemic, in just 9 months, we mobilized 90 million of private money. So this demonstrates the power of blended finance. And 7 months, 7 months were in lockdowns in different places. So people invested there without having seen us in person during 2020. Quite a miracle. I don't know if this will ever be repeated. And we had a big ticket from CaixaBank, which is one of the largest financial institutions in Spain, but we have Allianz Investment Management from Germany, institutional investor, and we have Bridgestone Pensions. So, yes, and I already mentioned, we are doing this new fund based on climate change, and I'm not going to go very deep into this, but basically, this fund will allow to jump the barriers to put the solutions, the climate solutions, in the hands of vulnerable people, and also foster adoption of the solutions, because, I mean, many times a smallholder farmer doesn't want to leave chemical inputs, and change it for organic inputs. But the fund is very much explained by this person called Socorro, who is a beneficiary of our funds, and it's just 2 minutes video, and that's almost going to be the end. I hope you can hear the video.
El nombre de Chelita. Mi nombre es Socorro Mendoza Torres, de que mis padres, uno falleció y mi mamá está imposibilitada, yo la tengo al cargo, me vine a la parcela, ¿no? Y gracias a Dios, ¿no? He conocido una cooperativa muy buena, ¿no? Con buenos prestigios, ¿no? Y recibo el apoyo, ¿no? Que realmente lo principal es la economía, ¿no? Y de eso, gracias a Dios, por medio de esa cooperativa, yo he podido surgir, ¿no? Como ven, no tengo paneles solares, hay un reservorio, también préstamos de Norandino, préstamos de los paneles solares para riego tecnificado. Acá en el Perú nosotros hay bastante sol, ¿no? Y es muy necesario, muy importante, porque por medio de ellos ya yo riego, ¿no? Puedo regar, como ven en todo el tecnificado, riego mis plantas de mango y plantas de limón. Todo, gracias a Dios. Sin el agua, las plantas no son nada, ¿no? Es muy necesario, muy importante, ¿no? Que el agua le da vida a nosotros mismos y a las plantas.
Yeah. So this is not high quality video. This was filmed by ourselves. When you go to the field and you find someone that wants to speak, you take out your mobile phone and you just record this. We have like 20 minutes record of Socorro. So Socorro has received financing from Norandino, which is a credit cooperative that we financed. And Norandino financed a water reservoir so that he can store all the water that is needed for irrigation. Finance solar panels for the irrigation system, so the irrigation system is completely free. And most importantly, finance organic inputs, fertilizers and pesticides. And now she's selling the mangoes and the limas. She's selling them with the organic label, so she's making even more money. So this is exactly what we want to do with our fund. Good news, this fund has even more protection in first loss than the previous fund. We have 25 million from the United Nations itself through the Green Climate Fund. And then we have the Spanish government is going from 20 to 50 million to give an additional 2% of return free of charge to the private investors, and we are filling it up with Allianz that already committed 40 million into the fund, and then family offices and high net worth individuals. And I finished when I was, when I was at a family office, and the investment committee like an investment. The only question at the end was, what does it need to happen for me to lose any money in this investment? That's what I was paid for, to say, what does it need to happen for me to lose an investment? So in this case, the blended finance, and I know this is the last sentence, the blended finance allows for losses of 57 million complete losses for the private investor to start losing a penny. Incredible, because the 57 is the 37 which are invested and all the return of the 37. So for the private investor to really lose any money here is going to be very, very tough. Thanks very much, and now let's go to the panel.
Oh, yeah.